Hi, welcome back to Wall Street Confidential. I'm Deborah Borchar. I'm talking with Jim Cramer. We're looking at tech, which seems to be the Teflon sector because
Nasdaq's
nothing
up.
bad is
No,
sticking to it. It just slides right off.
This has been a very hard one for me, and candidly, other than Hewlett-Packard and Qualcomm, I've not been able to identify tech stocks that I want to own for ActionAlertsPlus.com, but I'm not oblivious to the move. The move is happening. It all got kicked off with IBM reporting a much better than expected quarter. But the reason I've been flummoxed with it is that I always like to buy tech with high growth, okay? And the only ones that are high growth are Apple, Amazon, Google, and Research in Motion. Research in Motion up 20 straight points. I would take profits there. The stocks that people are gravitating to are companies in tech that have had great cost control and actually have some earnings opportunities, or headline names. Cisco's able to raise $4 billion cheaply. Well, maybe Cisco's good, even though the outlook's not good.
Well, that's what I was
Intel's
say.
able to spend a lot of money, but so what?
Most of them are saying IT spending's down.
Right.
They're forecasting 2009 to be down. They may have squeaked through 8, but they're saying 09 is going to be pretty challenging and pretty tough.
It's funny, all my portfolio manager friends are saying the same thing. Own them through February. We won't know how bad things are until March. Now, that's like a suspension of rigor. But a lot of times I regarded the most rigorous thing to do at my hedge fund was to be the most counterintuitive. In other words, if you wait to see what the buyers know, you'll miss the move. Now, for instance, Cisco, what the buyers knew is that this is a company that can be rapacious. It can take over anything at once. It's got a huge cash hoard. Now it's got $4 billion that it just raised in very low interest debt. So they probably have about $8 billion to buy. So if you scrutinize everything they could buy, they tend to want to buy private companies. I'm not going to say they're going to go out and buy ADC Telecom. They're not going to go buy Motorola. I mean, people, Ericsson. They're going to buy private companies that need money. So there's no play on it. But if they buy private companies that need money, then they're going to be able to raise their growth rate. So it's it's a virtuous circle. Intel spending on technology is good for Applied Materials. They report tonight, so I don't want to jump the gun. It should be a terrible quarter. A Lam Research, a KLA 10 core. But I'm stuck here because I have no earnings momentum other than Apple, which I've continually recommended here. Research in Motion, which is now, I think, too high for the moment. Google, which is doing better than the others, and Amazon, I think, is just a screaming buy.
Do you think part of it is that the people that are in this market, because a lot of people are out of this market now, that the people that are in this market are tech
It's a very good point.
They
the people who are left,
names.
right? The people who are left tend to be these growth managers who didn't do as badly as others and tend to be able to tell good stories. And it's not a good story to say go buy General Mills, which we bought today for ActionAlertsPlus.com. It is a good story to say, listen, we're buying a basket of Oracle and Microsoft and Hewlett-Packard because we see the turn. There's no turn to see.
Okay.
But people want to get ahead of it.
That's what I was thinking. Yeah. All right, thank you, Jim. Stay tuned for more at thestreet.com TV.